I'm Jackson-Jolley. I'm here with Brooke Daniels. She is the co-founder of Operation Wellspring. Brooke, welcome and thanks for being here with us.
Thank you. I'm excited to be here.
Yeah, so Brooke, Project Wellspring describes itself as, I wrote it down because it's a lot of words, part donor advised fund platform, part economic development engine, and part investment group. That's a lot of hats, but in layman's terms, tell us what that means, what you're trying to build here, and why now?
Absolutely. So we would say Project Wellspring is definitely focused on being an economic development engine, and we want to be the gel in the ecosystem. We started, I'll tell you a little bit about our origin story, started when me and my other partners, all of whom have backgrounds across finance, venture capital, family offices, we noticed that a lot of our peers were doing really great work to try to solve gaps around mostly wealth equality, but all of that work was siloed. And so no one was sharing resources in a really great way. We weren't sharing knowledge. It was very much build your own. And we said something has to change about that because we're not going to go far enough, fast enough if we can't find a way to collaborate and work together. And so out of that idea, we actually brought together a room of folks we knew in the community that were doing the work. We had over $1 billion in AUM represented in the room. And we said, if we build Project Wellspring and build this engine that can be the gel in the ecosystem, will this activate us in a different way?
Wait, say that number again for me. Was it 8 million or 8 billion?
It was over $1 billion
Okay.
AUM
Okay,
in
got it.
assets
Thank
under
you.
management across maybe 40 folks in the room.
Okay.
And we did this in Atlanta and just painted the vision of how we wanted to unlock capital, how we wanted to take a new approach to building systems to solve the wealth equality gap. And it was just great feedback about, yes, please build it. We would love to do this work. And that was how Project Wellspring started.
Yeah, but the thing that's interesting to me is that I know that you have quite a career path in VC and in finance. You've worked for some of the largest institutional company platforms that there are. Salesforce Ventures. Tell me if I'm correct, because I pulled this from your bio. Techstar, Frill Williams, Black Ambition. So you moved from that to founding Project Wellspring. I'm curious, what couldn't you do inside of those gigantic platforms that you want to do here with Project Wellspring?
Great question, Allie. So this is actually a large part of our thesis. One, I would say I'd had fantastic experiences working at these companies and really learning the game. Like with venture capital, a lot of it is around knowledge and demystifying venture. You hear it, if you're not exposed to it, it's like, man, that's complicated and what is it? And it can actually be intimidating, right? From creating access for people. And so when I've been in these different groups, and transparently, I still do mentor for groups like Black Ambition and Techstars. And so a lot of that is just sharing that knowledge in the ecosystem. But I did notice that you're still within the constructs of what those systems are trying to achieve. And so while we do have the flexibility to think about how we bring others along, we're still building alongside of a mandate. Whereas what we're doing at Project Wellspring is really around moving from incremental changes in existing systems to creating new systems that can go a lot faster. And we just didn't have the ability to bring that level of innovation in existing systems.
Okay, so let's shift for a second. You've cited a 4.4 trillion with a T opportunity gap. What's being left on the table? I guess I should say, can you describe where are you identifying that 4.4 trillion? What are you calling that? What's being left on the table, and who's missing out by this gap existing?
So America is missing out by the gap. And I always take a step back to talk about it in the lens of not just the impact from the lens of the groups that aren't getting a chance to build wealth through that opportunity, but also the lens of what does that mean for us and how we compete on a global stage. And I think right now, as everyone can see, there are threats globally everywhere, right? Not just physical, but a lot are intellectual. And also driven around AI and how do we keep up and what's driving the next. All of that has to do with how we harvest talent, we support talent, how we pour into talent in this country. And so we would argue that America does not have the luxury to leave behind 60 million, 70 million Americans who just don't get funded. we're missing out on that talent. And so luckily there's a lot of research now that goes out that talks about this annual 4.4 trillion gap. And that's a combination of not funding women, right? Certain founders of color. It's around geographic locations that are left out because so much funding still goes to San Francisco and New York and specific geographies. And so we're looking across all of those different lenses when we think about how to capture that opportunity gap.
And what are the mechanisms that are in place that allow that gap to continue to exist?
Yeah, so there's really, I would say, 3 or 4 areas that we're focused on when it comes to removing barriers. And I like to wrap it around a story because when we talk to people about this work, it really is along the lines of, because it's part philanthropic with the donor advised fund, but we're aligning that with private capital. And so we ask people, are we trying to solve problems at the root, or are we trying to band-aid problems? Like, what would it look like? This is how we start every strategy conversation, is how could we solve the wealth gap for good, period. Just get rid of it. And we want to think that big when we look at different mechanisms and strategies to activate on that mission. And so a lot of times we'll see philanthropic capital that's focused specifically on granting and focused on solving for the band-aid and the solutions that are happening now. We absolutely have to do that, but we also have to go upstream and look at the actual problems and how we solve the problems at the root of the cause. And so that's what we're focused on here. We always say, do you want to keep building backpacks and giving out backpacks every year that make us feel good? I've done a lot of those projects. Or do we want to build a world where we no longer have to give out backpacks?
You know, there's a lot of talk about the tension between philanthropy, funders, and founders, right? Because that's what you're, at the end of the day, it sounds to me like Project Wellspring is trying to work across sectors. How do you, I guess, flatten out that friction? How do you create an ecosystem of these 3 different, very different groups that can look at the same problem and work together with a really, to your point, with their very different mandates? Because a philanthropy mandate is a very different mandate than an investor mandate, which is a different mandate than a founder's mandate.
They are different, but they're not as different as you would think. And that's part of what we're trying to bring together. There's always been this idea that we put wealth in one bucket, right? Of all the strategies we do to build wealth, maintain it, protect it. And then the other bucket, we have impact. And we see that play out over and over again. And I actually think that's why certain vehicles like donor advised funds can get a bad rap. We all know there's $230 billion locked up in these donor advised funds, but it's because they've been taught this very traditional, almost endowment model of like preserving assets to do impact. And so what you see, that what happens is the bulk of that capital, which we would call kind of the corpus, 90% of it is locked up in traditional investments. A lot of it's public equities. And then they're only allowed to grant, 5%, 10% off the top. And it kind of continues with this cycle. And so what we're arguing is like actually having 90% of that capital locked up in these entrenched systems is causing a lot more harm, right, than you can, depending on where the assets are, than you can make up for by deploying 5% of capital that goes out in grants. And so it's actually more of a yes and for us. It's like we absolutely have to do grant work. We absolutely have to support people who are in need today. However, what does it look like if we truly innovate and redirect a part of that 90% corpus that traditionally goes into stocks, ETFs, mutual funds? What does that look like if we redirect that capital into impact investments as well that are solving problems upstream versus just at the root of the actual symptom that we're experiencing today?
Okay, great. And so let's talk a bit more about donor advised funds. First of all, you shouted it out when we first started, which is a lot of VC financial terms is jargony that keeps people out of understanding. So first, for our audience that doesn't know, I'm sure plenty of them do, will you define donor advised funds for us?
Absolutely, absolutely. So donor advised funds are vehicles that have actually been around for quite a long time, since the 1930s, but they've just historically been used by ultra high net worth individuals. But they work in a fashion where you're able to grant or gift, make donations into these donor advised funds, and they help reduce tax liability. You get a deduction for making those grants, investments, contributions into these donor advised funds. However, you don't have to deploy that capital right away. That's what a lot of people like about it. It still gives you flexibility to be thoughtful on how you deploy that capital. And where we're starting to bring innovation in donor advised funds is how you can deploy that capital. And so even though I know they get a bad rap, and philanthropy right now is really struggling, right, with looking at how they find more sustainable ways to build and grow. And so a lot of people are looking at how do we activate those donor advised fund dollars. But we would argue that part of it is also meeting people where they are and understanding that when you look at these accounts where people have, 10 million, 20 million, 50 million, they've had some type of exit event and now they've decided they want to put this capital to work for good. Most people have been taught this method of preserve that aspect, grant off the top. And so we're trying to introduce systems where that capital works alongside each other. So not only are we granting, how do we create platforms that allow that impact innovation on the donor advised fund? In today's world, unless you're working with independent platforms like our own, usually if you're just working with a financial platform on the donor advised fund side, you really don't have a lot of choice on where those dollars are invested. Some will ask you to decide if you want conservative, more, you get 1, 2, 3 buckets. We're going to decide where all those dollars are placed. And so honestly, donors, wealth managers, family offices haven't been empowered through the right platforms to do the work that we're talking about doing. But our platform is bringing a level of innovation to that, both from the lens of more flexibility in how we deploy those investments that then fuel impact from a different lens. So it doesn't have to be, that's kind of the part we're trying to break, is this lens of like, I make my wealth over here with these strategies. And then the only way to have impact from a philanthropic lens is granting. And we're saying it's yes and. It must go in tandem with the impact investing.
And then, so how about, you did mention that donor advised funds, or I'm going to use their short term because it's a mouthful, DAFs, have gotten a bad rep. And part of that is around lack of transparency. So I do hear you saying that you're focused on creating a more innovative system that provides more flexibility. Does it also provide more transparency? Question number one. Question number two, some folks think that there needs to be reform around DAFs. Do you believe that, or do you think that there is space for new types of systems to innovate within the current infrastructure?
Absolutely the latter. I think there is a plenty of room to innovate, and we're already seeing a lot of traction with it, right? Not just with our clients, but just across the board in the industry. A lot of the partners that we're working with right now are starting to shift into this model. I would say especially with some of the new proposed tax changes that are coming out that may increase the amount of taxes on investment revenue with foundations. We anticipate that's going to accelerate the transition out of foundations into DAFs. It's already been increasing because of the flexibility they allow for. And so the different innovations we are bringing, we think it's more to your question about picking the right partner for you to activate in the way that you want to activate, and less about regulation trying to drive that behavior. I mean, the donors and partners and family offices, investors, folks that we work with are very excited about how they can put capital to work in more interesting ways. And so even at Project Wellspring, we have this notion of collectives where we bring together groups around certain themes. So we have a sports and entertainment collective that looks at how our investors who are building wealth in sports and entertainment also want to put dollars to work for impact. And so an example of that is with the World Cup coming to Atlanta, and then LA is getting the Olympics, right? How do we also look at some of that capital flowing into programs that support the local community and small businesses? How do we help them build wealth and accelerate their business growth when these events come to town? And not just one time, but growth that drives them into the future. And so working with partners around these different themes and theses has been super, catalytic is probably the right word for the impact it's having. We have another collective that's also focused on community lending, place-based lending. How do we help bring more capital, both private and philanthropic, to CDFIs? We're looking at franchising as a way to help build wealth in communities. And so the tools we're using actually look a lot like investments, but we're bringing that to philanthropic capital as well.
So I'm curious about you. You built a career in some very elite rooms, rooms that don't necessarily usually hold space for people that look like you or like myself. How did you find your way, make your way, create space for yourself in those rooms. And what's your advice for others, either other aspirational funders or founders who think that there's not usually space in those rooms? How did you get there? What's your advice?
So it is about, I feel like truly opportunity, right? When talent and drive and ambition meets opportunity, it's actually the essence of what we're trying to capture in our thesis with Project Wellspring is how do we bring opportunity to areas that are overlooked? I'm originally from South Carolina. My granddad was a sharecropper. Dad worked in factories. My mom was a teacher. And so nowhere, even though I had a great education and upbringing, there was nowhere in there that we were talking about venture capital and finance. It just wasn't what we were exposed to. And in South Carolina in general, there's not this amazing venture market, right, happening for you to just go intern at XYZ place or any of those opportunities. And so for me, it truly was my junior year of college, my German professor literally printed out an application and put it on my desk and was like, apply. And it was an invitation to apply for a U.S. State Department and German Bundestag program called CBYX, but it was to create better business relationships between the U.S. and Germany. And I never heard of it before. He literally just pushed it across my desk. And I ended up being one of 150 Americans that got to, actually it was 75 Americans, and the other way was 150 Germans that came to America. But we got to go abroad as part of this U.S. State Department youth exchange program, and that led me to working at BMW Financial Services. And so that entirely changed my career coming back. And I just think it speaks to how one opportunity can really change things. The other lens I'll put to that too, because I know part of it is we tend to look at talent as being focused in specific areas. It's a bias we all have, right? About universities and where we went to school and how people are who are in our fraternities or sororities. It's very natural. And so when I actually first broke into my career at Silicon Valley, one of my mentors ended up working for a startup company, and she invited me to apply. Went through, I knew this job in my soul was for me, had great interviews. One of the leaders was like, this is the best interview I've ever had. And yet I was originally declined for the role because I didn't live in Palo Alto. And there was a preference to just hire someone locally in Palo Alto. And at this point in time, I was still in the Carolinas. And so 3 weeks go by, and I actually get a call back directly from the C-suite. And they said, you know what, we interviewed all these other people in Palo Alto, but none are as good as you. And so we're going to make an exception, and you're going to be the first North Carolina hire that we bring on board. And the rest is history, right? I spent 7 years there, all the things, M&A experience, led a practice group, grew with this company as a very early employee, private company through IPO, springboard into Salesforce and all the things. But it goes back to finding people who really will take a chance and give you an opportunity, even if you don't look on paper, like what you think you need, really being open-minded to what talent looks like.
Yeah, I love it. That sounded like that was a lesson for our managers and C-suite and talent recruiters, more so that for then like the talent, right? Because that was your story, was the opportunity that somebody helped you see. Now it was your drive that decided, okay, I'm gonna put the application in and do something way out of my comfort zone. But to your point, if that one individual that German professor hadn't put that on your table, who knows where your career would have taken you.
Exactly.
Okay, so we're almost out of time, but I have a final question for you. It's been quite a year, right? There's been lots of pushback on programs that create access to equity. It's been a year. But what makes you optimistic that we can close this 4.4 trillion opportunity gap? You're a little younger than me, so I'll say in your lifetime.
I am very optimistic because I think in times of need, and I think this is a time of need, that everyone can identify, no matter what your passion is, right? What you care about. This is a time of need just across the board. And so it actually makes us challenge our norms, around how we operate, how we think about capital, how we think about impact. And so there are a lot of bright spots. A few that we're seeing is with this wealth transfer that's happening, right? That's going to the next generation. Generationally, as you brought up, the way that people think about deploying their capital looks different, right? G2s maybe didn't make their money the same way that their parents did, and they have different expectations for how they want to see that money show up in the world. A lot more conversations are happening about both wealth and legacy. Across the board, we're seeing more collective giving. I could say Project Wellspring in some ways is that, because we're not actually trying to just build this massive shop in the middle, right? We're actually trying to be lean and link arms and partner, but look across the ecosystem and fund the ecosystem, but bring in expertise across all of these areas. But giving circles have come back in full force. We've seen quite a few organizations that are bringing back giving circles in a powerful way. And in some ways, Cap Table Coalition, which is an angel investing group I'm a part of, is exactly that, right? It's a group of people that are coming together to deploy capital and do deals in a specific way. And so I think that's a bright spot that we're seeing to continue to fund deals. The last thing I'll leave you with on the opportunity gap is that I do think in some ways this does give us an opportunity to really reframe the opportunity gap, not just in the lens of what it does for people and individuals from a charitable aspect, but what does it do for our economy, for the global economy when we look at it differently? Like, again, we cannot, if we're trying to achieve our goals, ignore a third of Americans, right? And think that we're going to activate on a global scale. We simply can't compete. And so lots of emotions around the way that things have been going, but I focus on the positive and the good work that I see come out of it. And I do think by shifting into the 4.4 trillion annual opportunity gap, what does that look like when we activate more women, right? We bring more investors along, more people of color. What does that look like when we give them the opportunity, not just for their individual lives, but for our country and on the global scale? And so those types of activations and conversations are actually bringing a lot of energy to the work.
Yeah, great. I love it. Now we are out of time. Brooke, thanks so much for joining us, and let's do it again soon.
Thank you for having me, Allie. And for anyone that's out there, I would say we work with a lot of different groups. So if you are a family office, a donor, investor, maybe a wealth manager, or just a partner who's also excited about doing this work in the ecosystem, building shared success around solving for wealth equity, we absolutely would love to hear from you.